For years, the financial relationship between the world's two largest economies was defined by a single, massive number. At its peak, China held $1.3 trillion in United States debt. Most of that money was held in US Treasury bonds. A Treasury bond is an interest-bearing IOU from the American government. When the US needs to fund its programs or military, it borrows money from global lenders and promises to pay it back with interest. But over the past 2 years, China has been quietly cashing out. They have been selling these bonds at a steady pace, bringing their total holdings down to around $800 billion, the lowest level in over 15 years. This massive sell-off leads to a high-stakes question. Is China preparing a financial nuke designed to crash the American economy? This move goes beyond simple accounting. It represents a strategic pivot away from the dollar, signaling a change in the financial relationship between Beijing and Washington. There are 3 strategic reasons China is liquidating its US bonds. The first is currency defense. China is selling dollar assets to buy back the yuan, the official currency of China, to prop up its value as it faces pressure in global markets. The second motive is sanction-proofing. In 2022, the West froze roughly $300 billion of the Bank of Russia's foreign reserves. Beijing treated this as a serious warning. If a conflict ever breaks out over Taiwan, China knows its massive dollar-heavy assets could be frozen instantly. Moving money out of the US system is a way to limit that vulnerability. The third motive is geopolitical signaling. Every bond sale is reported and tracked. By reducing its holdings, Beijing is reminding Washington that it still possesses significant economic leverage. These bond sales are not an impulsive attack, but a calculated insurance policy designed to protect Chinese wealth from Western financial control. If China is dumping billions of US dollars, where is that money actually going? China is now buying gold at a historically fast pace. Unlike digital entries in an American bank, physical gold held in a Chinese vault cannot be sanctioned or frozen by the US Treasury. The remaining funds are being used to expand the Belt and Road Initiative. This is a massive project where China builds ports, railways, and energy grids across Asia and Africa, effectively constructing a global trade network where the US dollar is optional. This creates a direct impact on your wallet. As China sells bonds, US interest rates often rise to attract new buyers. Higher US rates make the dollar stronger, which can weaken local currencies in emerging markets like India. A change in a ledger in Beijing can increase the cost of your next tank of petrol, or the price of imported electronics. This leads to a paradox. If China wants to weaken American influence, why don't they just sell the remaining $800 billion tomorrow and finish the job? The answer is the dollar trap. China's economy relies on exporting goods to Americans, priced in dollars. If China crashed the US bond market, the dollar would weaken drastically. Americans could no longer afford Chinese exports, bringing that trade loop to a halt. If American demand disappears, the domestic impact on China would be devastating. Export engines would stall, factories would shut down, and millions of jobs would be lost. Beijing is trapped. They cannot detonate their financial weapon without destroying their own economic engine first. For now, the US economy is not in immediate danger. America has a deep pool of domestic buyers and allied nations that can absorb China's sell-off without panicking the markets. What we are seeing is not an explosive war, but a slow, multi-decade decoupling as the world's 2 largest economies distance themselves from one another. Even if the process is slow, every move still sends ripples through global stock markets and influences the flow of international investment. In a globalized economy, macro finance isn't just an abstract subject for experts. It provides the context you need to understand why the cost of living fluctuates in your own neighborhood. Do you think China's steady sell-off is a genuine threat to the dollar, or is it just diplomatic posturing? Share your thoughts in the comments and subscribe for more. Behind every headline is a system that affects your future. We are here to help you decode it. Stay curious.